I'm Henry Camp. Commercial aviation has a major problem right now. All the airlines fell behind on maintenance during COVID. A side effect is that the maintenance industry worldwide was devastated, both financially and capacity-wise, which is what's important. The Aviation Protection Fund plans to roll up commercial jet engine maintenance shops right now while they're financially distressed. We will rebuild their capacity to take full advantage of the revival of normal demand, plus the urgent need to catch up on a huge amount of deferred maintenance backlog. Then as the backlog starts to dwindle and progress has been made on restoring capacity, we will sell our maintenance group for a premium. If that's enough for you to want to invest, stop watching now and contact me. For the more pragmatic my audience, let me share some details so that you can put some meat on this idea's bones. Like everybody, I have a certain number of accomplishments. You can read about what I've done, but let's focus on the global thinker part. I've got an advantage that comes from running small to medium-sized businesses. I can't help but see whole companies in their context. I thrive in times of change because I see the future coming and how to eliminate or at least mitigate problems before they arrive. Where do I find these problems? In plain sight. They're all around us. Some have crept up on us like the feature-laden but less functional software we use daily. Others have been there our whole lives and we are so familiar that we're blind to them. We neither complain nor act. Others are too big to handle. Today, I want to share with you a giant problem that hasn't quite arrived yet. Why on earth does he want to talk about a problem that hasn't yet manifested itself? Because if we act now, we can do something about it. We can save the world from taking a major financial hit and help people have their fun. So if you're into money, making a real difference, or just want to have more fun, this idea may be for you. For the last century, since the dawn of commercial aviation, one thing has held the airlines back the most. You see it here. It's the amount of money they were able to get from the sale of the seats. So the number of tickets sold times the average price per seat sold. It's tough on the airlines. A few folks are loyal to one carrier. Most people want the lowest fare. Travelocity, Expedia, Orbitz, Google Flights, and others help you compare and fast. If Delta is $401 and United is $400, United sells more seats. To try to get better prices, they have complex algorithms that change the price depending on when you buy, the class of ticket, how many tickets are already sold, and the traffic in your desired lane. Not to mention the rest of that aircraft's utilization for the day. This dog-eat-dog environment is why big-time airlines like Eastern, Pan Am, and TWA no longer exist. It's a tough business and strategic to the world economy. We're about to witness a shift of constraints in this industry to maintenance. This will cause a new batch of problems. Let's see what they are. Why do I say I hope you'd like to drive? Because this rash of symptoms are going to be a consequence. There's already a shortage of seats. You've already heard there are not enough pilots and flight crews. Maintenance is about to make the seat shortage worse. You know where this goes. Ticket prices go up. Not a little, a lot. We're all going to feel like the airlines are taking advantage of us. Of course, lack of availability limits tourism. Oh, no big deal, you say. Well, global tourism is a 12 trillion with a T dollar market and represents 14% of the world economy. Fewer seats means a weaker economy. Flying less means drifting away from faraway family and friends, and if that's not bad enough, also business relationships are weakened. This leads to misunderstandings between business partners, Zoom just ain't as good as being with somebody in person. Some deals won't get done, others will deteriorate, weakening the economy more. More driving means burning more fossil fuels per person, putting a greater load on the environment, and that suggests prices for key commodities rising. And high ticket prices make inflation worse. I've had enough inflation myself, haven't you? Do you see that all these issues are interconnected? It's a cascade of effects. The common cause? The industry's constraint moving from tickets revenue to maintenance. They aren't ready for it. The airlines have never seen this before. Why is this happening? Can't we do maintenance like we used to in 2019? Well, there was this new problem that cropped up in the US in March of 2020. Out of the blue, we had ourselves a pandemic. First, people couldn't fly, and then they chose to stay home. All airlines hemorrhaged money. As a group, they lost $220 billion in profit since 2020, and rightly worried about bankruptcies. They parked planes to reduce costs and laid off staff. In this situation, there was no need to perform normal maintenance. After all, they had parked planes to use for free whenever they needed them. Meanwhile, the pool of grounded planes requiring maintenance progressively grew. What happened to the maintenance and repair organizations, or MROs for short? Well, you know their revenues collapsed. Like the airlines, they also laid off staff and many went out of business. Of course, an obvious conclusion is that there is far less capacity today than there was pre-pandemic. All this flow of logic led me to an assumption. Maintenance companies are worth far less now than before. And now that we hear that people are finally back to flying more than before COVID, this is great news. Put these last three together, and it's obvious that we should be buying up MROs at cheap prices to take advantage of a return to normal workloads. That's exactly what the Aviation Protection Fund plans to do. Before I go on, let me substantiate my claim that passengers are back in their seats. As you can see from this slide, on the far left, 100% is the number of passengers on January 6th of 2020, before I'd have even heard of COVID-19. In April of that year, travel was banned. Demand recovered slowly from that point. Europe got back to normal in the spring of 2022, and North America a few months later. But then an outbreak of a new strain chased us away again. 1 year later, the recovery is back at record levels in Europe and North America, where most of the action is. Let me go back to that last slide to see my solution. Remember, they stopped doing maintenance back in 2020. During the recovery, more planes were flying, but without so many passengers. How much maintenance wasn't done over the last 39 months? I estimate at least 2 years' worth. With their diminished capacity due to the layoffs and bankruptcies, the MRO community today can't even keep up with currently required new maintenance. So each month's maintenance, they can't do that in a month. If you believe the capacity is 1/5 of what it was, that means that every month that goes by adds 5 months to the backlog. If you think half of the previous capacity is still available, then add 2 months for every month the airlines continue to defer maintenance. Let me stop for a moment to say that I don't blame the airlines for virtually stopping all maintenance. Their balance sheets were in bad shape. They knew what they were doing. They had no alternative. How have they built capacity so far? Very cleverly. They exchanged good engines and components from grounded aircraft to get other planes back into the air. Their grounded planes more and more resemble Frankensteins, pieced together from parts. When they're forced to do repairs, they pick the plane that requires the most minor amount of work. The airlines know well they can't do this forever. In fact, that trick is just about played out. soon they'll be forced to embark on significantly involved deep maintenance. Back to my story. As more airlines present their engines for rebuilding, the wait will get longer and longer. Quickly, it will exceed 5 years' worth, and I wouldn't be surprised if that were to double. Let's put the cost of these delays into perspective. In rough numbers, a new generation 737 aircraft produces about $10 million per month. So a ready-to-go rebuilt engine is going to be gold. I won't play games by suggesting I know how big the premiums will be. There are long-term considerations, such as being blamed for taking advantage of good customers. Yes, as I said, a rebuilt engine ready to be bolted on a wing and flown has never been more attractive. Here's the punchline of this complicated slide. The Aviation Protection Fund is going to roll up MROs, get them engines to repair to FAA specifications, and sell their servers for far more than our cost. Doing so will be an enormous boon to the airlines and the world economy. Here's the plan. Step 1, buying MROs certified to tear engine down, fix their parts, and overhaul them. Next, we improve the capacity of our MROs to do quality work. How? We make sure all the needed parts are present before starting on an engine. Then we focus full attention on each engine until it's finished. Focus and finish. These two things will make us reliable. Soon the industry will know about it because we will advertise the fact. Next, we offer our customers fair prices, plus the options to get their plane back in half the time, 1/4 of the normal time. Lost revenues from their grounded planes will result in more and more takers of our rapid and superfast service. This will attract business. After getting paid for their work, we will reinvest in adding mechanics and creating a culture that makes them want to stick with us. Every mechanic we can find a need for means one less for the competitors to rehire. This establishes a positive feedback loop that helps our MRO group continue to expand their capacity. So, what do we expect to get an investor back? One thing I know is that when you're talking about the future, one number, is useless. In fact, I wrote a book, Throughput Economics, which expounds on the subject. Read it if you want to know what to do with figures. This chart explains what to expect from the Aviation Protection Fund's MRO group. In year 1, we should earn 10 to 30 million. In year 2, that should more than double. After that, it depends on what we find, how many A&P mechanics we've been able to hire, and if we discover any new opportunities. Hitting these figures does not even require us to break out a single-digit market share. So less than 10%. In fact, less than 7% on the top. If we even partially corner the market, it could be better. Given the lack of capacity worldwide and the burgeoning demand, I can't imagine our outcomes being worse than the darker colored pessimistic columns in the first row. Let's look at how we do this. Let me introduce our favorite engine and explain why it's our choice. These engines have surpassed 1 billion flight hours, which is equivalent to 115,000 years of flying. They have carried 35 billion people over 8 million times around the world. And these numbers are growing every day and will continue to grow for more than 20 years. No other engine even comes close. To have made such a major impact, plenty were made, starting in 1996 and continuing through 2019. Of the models we're focused on, a total of 22,000. Nearly half of those have never been cracked open for maintenance. The majority of the remaining half have only had one shop visit. Most of these engines will be serviced 4 times, some of them 5 times in their lives. Before COVID, as I just explained, there were over 2,000 shop visits around the world per year. Furthermore, the number of maintenance visits must grow for 2 reasons. First, engines are getting older, and second, that backlog of deferred maintenance I've already mentioned. You've heard about the well-reported pilot shortages. The workaround to carry more passengers with fewer pilots is to fly bigger aircraft. Embraer and Bombardier build smaller regional jets. You know the type. If you're tall, you must bend over a little bit to embark in deplane. There are 3 seats in each row. The airlines are handling this many passengers by parking these smaller planes and substituting Boeing 737s and similar Airbus planes with roughly twice as many seats. Most of these larger single-aisle planes use the CFM56 engine type. The airline's fastest and least expensive way to quickly get grounded aircraft back at the gates is to complete needed shop visits. Over the next few years, when the length of the backlog hits record levels, everybody will read about it in their Twitter feeds. Capital naturally flows into opportunities. Other companies will certainly attempt to copy what we are doing. We hope so. Let them try to gain as much work as possible by working on the full array of engines out there. Money is not made by the numbers of engines in your queue. No, it's made by finishing more shop visits and getting paid. To complete maintenance more quickly, it behooves us to focus on the one dominant engine type, who will be the fastest. Our focused approach. A friend in Australia says, "Give me speed and quality. I want both. If you can't give me both, give me quality." That will be our guiding principle. In order for us to meet our stated objective, there are 5 steps that must be achieved. The first is to prove the concept to you, our investors. A little more on this later. To ensure that we can move quickly enough to take advantage of the industry's constraint shift, we'll need your funding. Third is acquiring and building out the critical MRO group. Therefore, our equity raised is focused here. Fourth, the APF group will find the engines for the MRO group to rebuild their capacity. This saves the MRO group from having to learn new tricks, or having to develop new contacts and skills so they can focus on overhauling engines, attracting and hiring certified mechanics to support that growth. In 4 or 5 years, once we have established that our MRO group is the only one that can reliably deliver on time, in full, at reasonable prices during this industry disruption, we'll sell to a long-term owner. I expect that to be a strategic buyer, such as an airline that wants our proven reliability for themselves as a competitive advantage against other airlines. Or perhaps a major public MRO who wants our capability, staff, and expertise for itself. Public companies tend to move more slowly and then spend money later to buy what has proven to work. Failing that, an exit to private equity after years of dramatically growing EBIT will command an attractive multiple for our investors, or we can go public. I promise to explain some of the details of how we will prove the concept. The first sub-step is to identify, evaluate, and buy our first CFM56 engine. Next, we'll begin a dating process with MROs, particularly the ones we might purchase. Seeing how they do and getting to know them as a customer is crucial. The ones we like will become our first acquisitions. The third step is to collect the parts necessary to rebuild our engine. Fortunately, I'm an investor in another company that taps into a $250 million fund to buy run-out engines, which it tears down to parts. Now, we're in no way obliged to buy from this company, but at least we can expect them to have used repair parts if we need them in order to move fast. The engines get matched with the required parts and the mechanics do their magic. An overall engine is the output. Lastly, the APF sells that engine outright or as an exchange to get an airliner back in the sky. We use those funds to buy more engines and repeat the loop until we have accomplished enough to attract debt and equity to rapidly scale the process. This concludes my introduction of the investment opportunity in the Aviation Protection Fund's MRO group. Please follow up with me if you're interested in my solution. It mitigates the issues for travelers, saves the airlines from a slower recovery than they deserve, and earns money for helping. Here's my contact information. Thank you.